Hello, everybody. Welcome to our monthly webinar. It's the last Wednesday of the month, and we have today presenting Lydia Desnoyers right here and our co-founder, Brett Tremblay. Today, Lydia will be presenting with us. She's the founder and owner of the CPA Business Advisory, and also the founder and owner of the Premium Profit, a brand dedicated to developing the skills of smart business owners. Her vision, I love this vision because her vision is just to empower women in business. So yes, power. And she will be sharing with us today which metrics you must track to feel confident making strategic decisions that will grow your firm, how to have a reliable bird's eye view of your firm that makes you feel confident that everything is running smoothly, even when in your absence, and how to analyze your performance to make improvements and grow in terms of revenue, cash, and profitability. So without further ado, this is Lydia. Welcome. We're so glad to have you here.
Thank you so much for having me.
Yeah, Lydia, thank you so much for joining us today. I'm very excited to, you're just fun to chat with anyway. But specifically, we're gonna hopefully give our clients and our attendees some really good value today in talking about the KPIs that your firm should be tracking. You do business advisory and outsourced CFO services, and that's, lawyers and numbers usually don't mix that well, right?
Right.
And I'd argue sometimes like doctors and CPAs and language don't always mix that well, and that's why we all work together
Right.
very nicely. And so I'm gonna start sharing the screen, and let's chat. So,
All right. Awesome. So let me first let everyone know that I created slides to kind of help facilitate the language, but the presentation and our conversation. But I really want this to be interactive. We'll go with the flow. As Brett says, we were cool. We love to chat. Brett appeared on one of my webinars, and we had such a great time. So I really want this to flow. So thank you so much for having me. Yes, Brett. I mean, lawyers, phenomenal. You're smart and stuff, and you're work great legal strategies for your clients and stuff. But for those who are running their own law firms, sometimes the business side of running the law firm is a bit of a challenge. And so I definitely like to work with law firms on business strategy and scaling and growing their law firms. And one of the things that I like to look at with my clients is their KPIs, their key performance indicators. Okay. And so I'm really excited to talk about the top 5. Now, here's the thing. This is top 5. This is not the end all be all. There are so many things that you should be looking at within your firm. There are things that vary depending on your practice area, the size of your firm, in terms of revenue size, in terms of team size. Also, your goals and stuff will dictate which KPIs are important. Remember, they're called key performance indicators. So it's whichever performance indicators are key to the decision or the goal you're trying to achieve, that's what you're going to look at. But these top 5 are pretty universal, and that's why I chose them. But there are so many others that you can use. And so if we can go on to the next slide. So Brett, thank you so much for bringing my like the left button on my mouse.
go ahead. Did I go on too far? Or are we good?
It looks like you're still on the first screen, at least on my end, what I see.
Oh, really?
Yeah, it still looks like on the first slide. And that's okay. On the next slide, it really covers why you should be tracking KPIs and how KPIs can facilitate it. Here we go. All right. So KPIs or key performance indicators or metrics, whatever terminology you want to use, are intended to help you make strategic decisions, right? And it's about being strategic of the direction that you want to take your law firm, as opposed to your law firm pretty much running your life and you trying to catch up every day. Okay. So you are setting the course. Helps you to track your firm's performance, even in your absence, right? I think most people on here are, own your law firm. You may be working a lot of hours and stuff, and it's hard to visualize, but you want to get to that point where, listen, you're not working in your firm anymore, you're working on your firm. And so what sort of information should you be looking at while you're laying on the beach, while you're on vacation with your family? What sort of information should you be looking at that will provide you assurance that your firm is still running as it should, even when you're not there? KPIs are also meant to be used to reach your goals. Okay, so do you want to expand your law firm? Is the goal ultimately to sell it? Is a goal for you to retire, transition out, and have it go down, pass down generationally or to a partner? So it can help you with developing and achieving those goals. Okay, so if KPIs can help you with all this stuff, right? So magnificent. Why doesn't everybody just have their KPIs ready, right? And so honestly, it's because a lot of people are terrified, right, of all of the information. Where do we get the information from? Who's going to be tracking it? If you could go on to the next slide, Brett.
Lydia, we had somebody comment that the light behind you is so bright, they're having trouble seeing your face. Can you just sit?
I can't see myself anymore on the screen, but how is this?
If you move a little bit and you block that light, that's helpful.
Am I moving in the right direction? Because I know I can't see myself, and I know sometimes it's mirrored.
Yeah, you moved in the right direction. Let me
just a little bit more.
No, I think that's good, because then it's also behind you. But the ring light, and I'm so sorry, but the ring light, if it's in front of you instead of behind you, will be really helpful. Like the one, because now we can see the one.
Oh, okay, yeah, I did move that now. Okay, how about this?
Let's put that in front of you, not behind you.
Yeah, I don't have anything behind me.
Okay. That is, I think, better. Like I can see you just fine. But I'm just answering that one of our attendees said that the light was blinking out and leaving a silhouette. So I think that's better.
Is this better? I'm so sorry. And I actually put makeup on for you guys, so I do want you to see. How is that? Is anyone monitoring the chats? Is this good?
Yeah, so they'll
Okay.
let us know, but let's keep rolling.
Okay, no worries. Okay, so where was I? So right, it's about tracking the information, and sometimes, listen, KPIs may change throughout the course of operations, but it's about tracking data. Okay, data converts into information. Okay, and so this is why I take the time to say, hey, look, after we go through this, I may get questions like, well, where do I get this information or whatnot? And chances are, between your case management software or your accounting software or CRM software, all this information you're able to track it, all right, or most of it. If not, you can create an Excel spreadsheet and start tracking data. You never know how it can then translate into information that can inform your decisions, okay, and guide your decisions. And so a lot of times I see people, not just lawyers, but people who have these amazing software, right? And have all these fields and data that can be housed, but they're not using it to its fullest capacity. So it's like buying a Ferrari, driving it like a Hyundai. And no offense to anyone who drives a Hyundai, they're great cars. But the point I'm making is that we buy these really sophisticated software, and then but we're not using it to this fullest potential. Thank you, Joe. And so it's just important to track information. So something, for example, is hours. Now, for firms that don't necessarily bill by the hour or flat fee arrangements, they may feel like, okay, well, since I don't bill by the hour, I'm not going to track hours, right? Even though their software allows you to track non-billable hours. Well, you should still be tracking those, whether you're going to bill a client or not, because you can use information to check on efficiency, how many hours your team member spends on different kind of cases, which cases take long, which cases, are shorter, and those can help drive decisions, whether you want to pursue more cases, whether you need to have a conversation with your team members about increasing productivity or whatnot. Okay. All right. Any questions or anything so far? Again, I want it to be interactive. Brett, do you have any questions for me? I feel like the wheels are turning.
No, they are, but I say, no, I'm with you. I don't,
Okay.
I don't want to buy a Ferrari and drive it like a Hyundai, so.
Right. Exactly. So track the data. And so now if I may ask in the chat, if anybody wants to kind of let us know where they're joining us from, what your practice areas are in chat. I see there's some comments in there.
Yeah, if everybody.
Okay. All right. All right. I like to know, oh, there you go, commercial litigation. Thank you, Dennis. All right. Laura from Columbia. Virginia. Hi, Sherry. Sherry and I met on Instagram. From Atlanta, business patents, trademarks, and copyright. Okay, perfect. Thank you for letting me know. It kind of helps me with my conversation as I'm going. I may kind of pick on you and say so and so, whatever. So I love to have interaction and to make sure you all are awake. I'm not putting you to sleep. Okay. So again, top 5. You'll notice by the time we're done, I do not mention revenue. Now, does not mean that revenue is not an important KPI. It's very, very important. But I kind of feel like everybody knows at least check the revenue. In fact, that usually when I ask how is business going, the answer I get is great. Our sales are up this much, our revenue is up this much. So I know you're tracking your revenue. I'm not going to put anyone on the spot and ask you if whether you are or not, but chances are most people track revenue, but that in and of itself is not enough. But definitely revenue is a great KPI to look at. But let's go into our first one. So net profit per case. Anybody want to take a stab at what net profit per case is? All right, so net profit per case is our revenue, the price that we quote for our cases, less any direct costs related with it. Now, this is a good KPI to know, because it's not just net profit at the firm level, but per case or per case matter, right? Especially if you're a firm that provides services in different practice areas. So I saw in some of the responses that we do have different case areas or case matters. Okay. And so knowing your net profit per case, you can decide, okay, well, listen, this case is a lot more profitable than this one. So let's focus our marketing on getting these kind of case matters. Okay. This case has more cost. Let's see how we can drive down the cost for these cases and streamline the process to improve our net profit per case, which in turn will improve your net profit as a whole. Okay. You want to go to the next slide?
Absolutely.
Okay. And anyone, as you have questions, let them know. Do we have someone monitoring the questions in the?
Yeah.
Okay, perfect.
We have a question here. What is a good net profit margin per case?
Oh, awesome. Great. Okay. So per case, that may vary, right? It may vary depending on the case matter, your practice area. What I can say is your net profit as a whole for your whole law firm, you'll have different people say different things. So rule of thumb, the rule of 33%. So your 33% of your revenues should be towards payroll. 33% of your revenues should be towards other operating costs, and then that leaves 33% for net profit for your firm as a whole. So using that metric, then at minimum 33% net profit per case would be an ideal situation for you. Okay.
Lydia,
Sure.
Let me dig in there. I think everyone knows I'm also a lawyer. I own a law firm, those kind of things, right? So if you're, I don't know a lot of law firms who have at the end of the year a 33% profit margin. So when we're talking about profit per case, it's not necessarily the entire firm's profit margin, right? Because there's still other administrative costs to running a firm. But I'm asking you, but also kind of putting in my sort of like opinion there. Is 33%, like, do you have clients who achieve a 33% profit margin?
So industry, it varies depending on the size, right? That anywhere you look, the rule of thumb is like the 33. So 33% again goes towards payroll. So that helps you with dictating, okay, how much revenue should you be charging per case, or how much revenue should you be bringing in? And then another 33% is other operating costs, which then leaves, all right, the remaining 33%. So that's something as a guide. Of course, it varies depending, again, on your practice area, your size of your firm, because someone who's, you know, what's the word I'm looking for? So, you know, it has like these large cases and stuff that that can be run by one person. Their profit margins are probably a lot higher than someone who has that. So it's just it's you, any of the KPIs would be kind of a guide based on industry. But then the other thing, which I'm so glad you asked this question, because a lot of times these KPIs, it's not just looking at it in a like a snapshot, right? It's looking at a trend. So it's looking at these KPIs periodically and seeing what the trend is for your firm. So you can actually set your KPIs based on historical trends. You can do it based on your industry and others within your industry and see that. But the 33% again is just meant to be a guide. It's not like if you're at 33%, you're like the golden poster child, or if you're below, you're doing horrible, or if you're above, you're superhero. It's meant to be a guide. So to answer that person's question, the rule of thumb is usually 33%, 33.
I'm glad you made that distinction. Like, so also if you're in growth mode, like sometimes my admin costs are higher, right? Because we have hired before we're sort of can justify because we're planning on growth, right? Different strategy. And I think the bigger point is looking at it over time and saying, okay, it's actually 20%. Maybe I make a small change and this year I want to get it to 25 and next year 28. It's not a right or wrong, it's just an indicator, right? We want to point out these are key performance indicators.
Correct, right? It's and that's what at the onset we said, it's to help you make decisions. It depends on your goals. And then you set those indicators. Okay, so the first thing is to track that information. As a CPA, like I'm always baffled by people who don't have any sort of financials, because I mean, the historical information is a great indicator, right? It's you know, to know where you're going and how. First, it's identifying where you're going. All right, and then how you're going to get there and how long it'll take you to get there. You need to know where you are right now. How do you know how long it's going to take you to get from point A to point B if you don't even know where point A is? So definitely tracking information, looking at historical data and looking at the trends. That's what's going to help you with making these decisions. Okay. Thank you so much, Brett. That was awesome. I love it. Teamwork makes the dream work. All right. So net cash, it was on that slide, but I don't think we talked about net cash flow. Did we talk about it yet?
Oh, no, I skipped it.
No. Okay, no problem. No problem. I mean, we could skip it, but then I know we're going to get chats like, wait, we only went through 4. You guys promised me 5.
Promised 5, but we're going to dangle a carrot. The 5th one, you gotta fill up.
So net cash flow. Okay, so the question first of all, net cash flow. It's taking all the cash that comes in through the door and subtracting all the cash that goes out through that door, and that's your net cash flow. So it's a very simple calculation, but it can be challenging, especially if you're not tracking, if you're not depositing all your revenue or running all your expenses through your business bank account, right? So that's the first thing, is making sure that everything that deals with your law firm is being run through one bank account, and that can make your life easier. So of course, I'm a big proponent of using an accounting software, but let's say you're just starting off and you're just bare bones, then you can use literally your bank statements to see what your net cash flow, your net deposits are, so long as you are running everything through your bank account, right? So that's a little cheat sheet there. But the net cash flow, the question I get is, well, Lydia, what is the difference if net cash flow is money coming in minus money going out? Well, isn't that the same thing as my net profit? Money coming in and minus money going out? And the answer is no. It's easy to think that way, especially if you're a cash basis law firm or business. But it's really different. Your profit and loss statement is revenues minus expenses, but your revenues is what? Your sales, what you bill your clients, right? Right? I think I'm right. I need a head nod. Brett, you're the only one I'm seeing. Anybody in the chat is revenue is what you bill your clients, right? Can I just get a yes in the chat?
Anybody, first person.
Anybody? So yes in the chat. There we go. Right? Revenue is what you bill your clients. But if you've been in business or had your law firm for even 3 months, you know that what you bill your client is not necessarily what comes into your bank account, because you bill your client, let's say today is September 28th, but they take a few days, to send you their payment. You're chasing. There you go, Dennis. Thank you. Isn't it what you collect? Exactly. So there is a difference between your profit and loss, right? The revenue, which is what you build, and the cash that actually comes in. So it's not enough to just look at your profit and loss and say, hey, look, things are great. It's looking at your actual cash flow. And then also keep in mind that there is cash activity that doesn't necessarily have to do with your actual operations. So for example, obviously operations are billing your clients, paying operating expenses. But let's say you have referral partners, right? And they pay you a referral fee for every client that you refer them. Let's say you do co-counseling or whatever the case may be. So there's cash coming in other directions. So you want to incorporate that cash into this calculation to see how well you are bringing in cash. And if you're consistently, again, because we have to look at trends, if you're consistently having more cash outflow than you are having cash inflow, then that's going to make you look a little further, see where you can cut back on expenses, see how you can improve cash coming in, right? So maybe even change your billing practices, collect payment authorization forms. Sherry just mentioned about flat fees. Sherry, great point. And if I could take a few minutes to address that, let me go back and look at, unless you get flat fees up front though, right? Okay, so that is a good point. Sherry, what state are you in? Virginia. Okay, so in Florida, with flat fee arrangements, you're able to put your flat fees straight into operating. In some other states, even if it's flat fee, if it hasn't been earned yet and the work hasn't been performed, it has to go into a trust account. And when we're looking at net cash flow, we tend to not include the funds sitting in trust because that's not your money until you've earned it yet, right? So looking at net cash flow, you want to make sure that you're looking into your operating account. So depending on what state you're in and what your bar allows, flat fee arrangements may not necessarily go straight into operating until it's earned, right? And so you definitely, in a net cash, with the cash flow, anything dealing with cash flow, cash planning, I would strongly recommend that you do not include the funds in your trust account, right? Not until it's earned and been transferred to your operating account. Wouldn't you agree, Brett?
Oh yeah, big time. And there's a huge distinction here too between, even though I'm in Florida, I've been told in the past, you need the cash flow, so we can put it in operating, we usually do, but the smarter way to do it is put it in trust. And then as you bill it and earn it, then you move, because now it's a true, cash flow indicator, instead of sort of like, if you get 10 retainers for $5,000 each in August, and you say, oh, I have $50,000 and my expenses are only 10. But like that can distort September, because you basically haven't done the work yet, and so that can throw you off later. So it's a nuance, but it's a good point. Like, you've got to make sure that your cash flow is what you've actually earned, not just what's been given to your firm, especially if it's in trust.
Okay, right, yeah. So, my thoughts on that in terms of net cash flow, that net cash flow is also a component of cash planning, right? And so, yes, you may argue that it is distorted because you're getting a lot of cash in 1 month and maybe not so much the next month, and the work hasn't. But I mean, here's my thing. If the bar does not oppose putting the flat fee straight into your operating, put in your operating, right? And then what you do is do actual cash planning. So now we take the beginning balance, the net cash flow, And then now we can project what our ending balance will be, and then we can, you know, plan accordingly, right? So if the next month we're not expecting that much cash to come in, then we may say, okay, let's kind of hold back on some of the expenses that we have, or double up and get some more revenue in. Okay, so let me look at some of the comments and then we can move on.
Let me comment on Michael's point.
Okay, I haven't looked at it yet.
Michael, where are you again? You're in Arizona. Yeah, that's what I thought. Yeah. Actually, in Florida, non-refundable retainers are enforceable, so you don't need to return. But look, that's kind of a nuance that we probably don't need to debate on this.
Right.
So, but Michael's point is really good, because maybe most other states it's not like that, and they're gonna require you to refund a reasonable.
Right. Right. And that's why when Sherry posed that question, I asked where you are, because it is really important to understand what your bar does allow and not allow. But that's another factor, right? That's something else to consider when you're doing your cash flow planning. So understanding if it's refundable or not, what the rules are around flat fees. And if you're allowed to put in your engagement letters, hey, look, once the work has started under flat fee arrangement, it's not refundable. So I'm not sure if that's a question or a statement. So
He's just saying that you
Okay.
can also put it straight into operating, and not, if like some of it is basically refundable, or like the clients do back some, it's not like a violation because you didn't put it in trust. Like you can put it.
Oh, got you. Okay, got you. Okay, yeah. So, I mean, again, these are factors to include in your cash flow, but again, this makes it proves a point that this is why it's really important to just, you know, focus on your operating. Now, the idea is to look at the cash going in, right, and the cash coming out of your cash flow and statement. And so if you have to refund something, then guess what? That's the cash outflow for the period that you have to refund. Okay, so that's to Brett's point, it's you know, we can stick to what the KPI is. All right, thanks for that. I love the engagement though, Michael. Thank you. At least we know we're paying attention. We have people paying attention. Okay, so the next one is the one I'm most excited about. Okay, this is my favorite one: lead conversions and client conversion rate. And I'll tell you, I have these slides, but I'm just talking. I literally have notes here that I have not been looking at. So hopefully I'm covering everything that I'm supposed to be.
I do that all the time too. Once I go on, I just want to talk. So yeah.
Right. Okay, so how many of you at minimum track how many leads come in? Yes or no? Brett, you can raise your hands too. I know you do. There we go. All right, so again, depending on your process, like your intake process and your consultation process or whatnot, you can look at lead conversion and client conversion. So the formula here is the number of clients that have been converted, the number of potential clients that have converted into becoming into clients divided by the number of leads. Okay. And even then I can do a sub calculation of that, because there is a difference between leads that become consultations, right? Because that can be a metric that you track. And there's a difference between that and a number of consultations that become clients. All right. And depending on which one you use, they may tell you a different story. So the number of leads that are converted to consultations can tell you, right? Because if a lead comes, if this is your process, a lead is just someone who found you on your website, perhaps. They may have scheduled online to talk to somebody, or they may have just picked up the phone and called. And then you have an intake specialist or whatever that picks up. Potential client says, hey, I need help with XYZ. At that point, you can say, you know what, that's not even an area we work on. Sorry, but we can refer you to somebody else. We can say, you know what, we think we can help you. Let's schedule a consultation. Okay, so that's converting a lead into a consultation. And so that conversion rate, obviously the higher that rate, the better that you're performing. But what that tells you is the higher rate of leads that turn into consultation tells you that your messaging, right, on your website or whatever is is helpful, right? So you're bringing in quality leads. Then you have your consultations, right? With this lead that you believe you can help. And you have your 1 hour consultation. You may or may not charge for that. And then from there, by the end of that phone call, hopefully they've become a client or they didn't, right? And obviously the higher that rate, the better it is. But what that tells you, the conversion rate tells you how effective your consultations are, right? Are you communicating your value properly? Is it the price? Is your price that you're quoting, is that turning people off? Are you communicating that? So that tells you how effective your consultations may be. Okay, that conversion rate between a consultation and becoming a client. It also can tell you, hey, look, maybe this person just wasn't a right fit. And so we can go back to your lead conversion, right? And the person taking the initial phone calls, are they screening the leads properly before they become consultations? Because listen, we only have so many hours in a day, right? And especially if you're a smaller firm, you have to spend your time on actual paying clients. So having 1 hour consultations with people who, somebody should have caught from the very beginning is not a good fit, that would have saved you that hour, right? During the consultation. So this is one of my favorite metrics to track. I think it's so valuable. And then from there, and if you have multiple people doing consultations, then it's good to have this metric per person, right? So we can see how well they're converting clients into, converting prospective clients into actual clients. Is everybody with me?
Yes, I do.
Awesome.
Let me just ask a question, I guess, or make some. There's so much decision making and data from just what you're talking about right now, right? And is it a quality lead? How well are my sales doing, etc. One of the best things I ever did was start charging for consultations. How do you just briefly mention that? I know it's a separate conversation, but in all of my years in business, that is one of the top 5, I can point to difference makers in my time, my energy, everything is charged for consultations. Now, that actually may increase some of your consultation to sale conversion, right?
Yep.
Increase your lead to consultation conversion, etc. So there's just a lot of fun things you can, play with if you're tracking this, which is your point.
Yeah, but this is why I love you. Teamwork makes the dream work. Exactly. I mean, everybody I work with, if I start working with an attorney and they're like, they don't charge for consultations, my reaction is always like, what? No, effective immediately. Charge for consultations. And here's what's going to happen when you start charging for consultations. The fear may be that you'll get less, but that's okay. What's going to happen though is that you're going to have higher attendance, right? Because when people don't pay for the consultations, guess what? They may not show up, right? So once they've paid, then okay, you have someone serious. So that already tells you, like to Brett's point, is that the likelihood that they'll convert into a client increases that much, right? And I would even implore to make sure you collect the consultation rate before they even come in. Right? I know some people like they're like, okay, well, when they come in, they'll pay. No. Collect it at the beginning. Have somebody, your receptionist, your intake person, collect the payment at the time that they're scheduling. If you use an online calendar, mine has before they schedule, they select the time, before they hit confirm, they have to submit a payment, right? And so yes, and then the thing is, once somebody has paid that consultation, and they have, so long as you actually can provide the service and help them with their case and it's a viable case, chances are, because you already have their money, they're gonna more than likely want to convert, right? I don't know, Brett, if you do this, I'm not gonna put you on the spot, but sometimes what I've seen some people do is they say, hey, look, if you sign up with me today, right now, I will apply your consultation fee towards your total fee. So this person's already basically in their head, they're like, hey, I pretty much already paid for the service. Let me just pay the balance and retain this person, right? Now, of course, if you want to keep your consultation fee and actual fee for the service separate, by all means. But let's say the person doesn't stick with you. At least they paid you for that hour time. All right. So that's like Brett said, it's kind of like a separate conversation, but it's definitely worth having. There are some, there's some literature about like the psychology of pricing and things of that nature. And that's why I love the idea of saying, okay, look, well, and what you can do is say it has to be done by the end of this call. It's not like, hey, give you a week to think about it. No, this is the perk. If you get it, you'll get this perk if you sign with us right now. Of course, you can still reach out a week later, but it'll be separate. All right. So next one, common size metrics. Okay, so that one is the first of all, the formula is you basically, let's visualize your P&L, right? Your P&L is your revenue minus your operating expenses, right? So that's payroll, advertising, software supplies, office expenses, commissions that you may pay to people who refer business to you, or whatever your different expenses are. Rent, if people are not working from home anymore. I don't know how things are in Florida. I'm in Barbados. Anyway, so you would picture your P&L, and you take a component of your P&L, like an expense. So for example, let's say advertising, and you divide that number by your revenue. And so that basically now will give you a percentage of all your expenses against your revenue. So how much of your revenue is being absorbed basically by each of these expenses. Now, why is this important? Why do we need this number? When comparing, one of the things that we want to do, as we talked about at the beginning, is like you want to do trend analysis, but then you also can compare yourself to your industry, right? But what if, let's say law firm A has payroll of $30,000. Well, I'll say $33,000 because you see where I'm going there with the 33%. So law firm A has payroll expense of $33,000 and law firm B has payroll expense of $33,000. You may assume, hey, all right, all things equal, we're both performing well. But what if law firm A has revenue of $100,000, whereas law firm B has revenue of $200,000? Now who's performing well, right? We would say law firm B, right? Their absorption of revenue is lower than that of law firm A. And so the common size metrics allows you to compare your firm to that of your industry or your competitors or whatever, despite your revenue size. And so that's a good thing to know. Like we asked a question about, okay, well, what should net profit be, right? Your net profit margin, or what should your payroll expense be, right? Some would argue 33%, some would argue 40%. Advertising, I've seen everywhere from like 7% to 12%, or whatever the case. So it's knowing that percentage of your expense, how much it absorbs your revenue, and being able to compare against your industry, right? And that can help you with decision making. Are you on track to being that law firm that you had an idea with? Where might one find figures for other firms of our same size with which? Okay, so that was Michael.
Yeah.
Michael, stay tuned. I got a gift for you. All right. Stay tuned. We have an offer coming in at the end, and that will kind of help you out, Michael. All right. So are we good on common size metrics? Anybody have any other questions?
Yeah. Why is it called common size metrics? Like, was there a?
It just means getting. It's funny. I never actually took the time to look at it, but it's just. I guess it's just getting it to a size that allows you to be at a common metric. Then I don't know. I'm making shit up, but that's what it is. Okay. So it's getting it to a common. My assumption is that it's getting it to a common level that you can compare across industries, right, or excuse me, across.
Yeah, I was just interested when I saw your list of diving into that one. So awesome. Let's talk about the fifth and final one, employee satisfaction.
Okay, so up until now, most of our KPIs were like financially or number based, whatever. And so employee satisfaction, doesn't that sound like so subjective? How do we measure employee?
Right. Why is this number 5? I'm so intrigued here.
All right. So I think all of us are experienced, and all of us, I mean, our professional services. I mean, there's been just a shortage of talent, right? And it's not just a shortage of talent. It's not just, people that you're hiring are not good, but it's also the people who are good are not staying, right? They're like, hey, I'm out, deuces, I'm not happy. And research has shown that even with really good salaries, if employees don't feel satisfied, in the organization, they're not staying. And so satisfaction is like, can mean different things to different people. So do they feel challenged? Do they feel like they have the benefits that that are meaningful to them and their families? Do they feel that they're contributing, that they're able to contribute? Do they feel included? You know, let's talk about DE&I, right? Do they feel like it's an inclusive environment? And so these are questions that you can ask. Now, I know it sounds subjective, but there actually are ways to turn this into a quantifiable metric, right? And so you've ever seen surveys that say on a scale of 1 to 5, right? On a scale of 1 to 10, how would you rate? On a scale of 1 to 5, how are you rate? How likely are you on a scale, you know? So you can actually turn this employee satisfaction that sounds subjective and turn it into quantifiable metrics. And so you can set the parameters and set the things to really understand, okay, listen, are your team members satisfied? And if they're not, what are ways that you can improve team satisfaction within your organization? You are smiling so much. What's going on? Share it with me.
I love this. I'm loving it.
Right. So yeah. And for those who are maybe smaller firms that maybe don't have a lot of employees or whatnot, but you can easily turn this into client satisfaction. That's just as much a meaningful metric as employee. But I definitely wanted to include this in there because everyone I talk to is having employment, finding good talent, and something like this, asking the question of how satisfied are you, that already can put you above all other firms, right? And your employee would seem satisfied, and they'll tell you, hey, look, if I can see this change, I feel more satisfied and I'll stay longer, I'll contribute more, I'll help towards business development. All right.
Yeah, we have a question, and then I want to add something. Part of the reason I'm smiling so much is like, that's why I get staffed up. We do what we do, right? It's like we're able to find such amazing people, and our stickiness, at least our data says, is a lot longer than common level positions, domestically placed. So that's one part of it. The second is, I read a book recently on client experience. And the guy that wrote the book was talking about the old Net Promoter Score and how it's like, how likely are you to recommend services? And he was just trashing that question because, one, it's overdone, and it's not really a thoughtful question. It's kind of like, well, I don't know, like, how likely am I to walk up to a stranger and just ask that, like, recommend services? Is that when I'm asked, anyway. So we have a question that says, and I don't know if you've gone to this level, but what are examples of questions I can ask my employees to determine their satisfaction? So, and how to make sure that they're being honest. It's like, how happy are you here? Like, that's just such a generic question to ask, but like, and maybe Lydia, you've thought this through more, or have examples of like deeper questions.
Yeah, I mean, I think it takes knowing your team members, and probably even from the hiring, from the moment of hiring, of setting the expectations. Like, during interview the process, I always encourage people not to just ask questions, but let them ask questions. Let whoever the candidate ask questions as well, because it can be very telling of what their expectations are, and what they want to get out of their time with your firm. So you can actually start that from the very beginning of setting up that tone. And how can you make sure that they're being honest? I mean, that one, you kind of just you kind of hope that they'll be honest, right? If anything, well, one, you can let them know how important it is that they're honest, right? And that the idea is that you would make every effort to make changes or anything, or accept their feedback. Now, what you can do, there are ways that, depending on the size of your firm, you can have them like report to somebody else, or do the evaluation with like another colleague or whatever. And then, it's a tough, I'm sorry?
A third-party administrator.
A third party, there you go. That's, I guess, the simplest way. I'm
Right.
thinking like other person, but yes, it could be a third party. Oh, the question disappeared. Yeah, it could be a third party. But I think if you set the tone that, listen, you're open to ideas, you want to make them happy, I don't see why they wouldn't be honest. And so, the kind of questions are, how satisfied are you? Like, do you feel challenged? What would make you happier? How do you feel about the benefits that you're receiving? How do you feel about the workload? They'll tell you. It's really not that much of a mystery. Like, they'll tell you if you ask, right? Okay.
Yeah.
So I think the next question would be like, okay, how often should I review our KPIs? Now, of course, as I mentioned at the outset, is that there are plenty other KPIs that you can track. Different KPIs, different things. So for example, employee satisfaction. I mean, obviously you can't do it wouldn't be productive or conducive to do it every day, but let's say once a quarter. Or with some of the other ones, cash flow. I mean, that could probably be done weekly. So it really depends again on the goal and the decision you're trying to make of how often you track the information. And so if anyone's feeling overwhelmed and like, okay, how am I going to do this while coming up with legal strategies, going to court, doing filings and all that stuff? Well, to Brett's point, that's what you have Get Staffed Up for. Right? This is something, once you create the parameters, you can have your VA assist you with tracking your KPIs, right? I mean, we talk about client conversions. Again, if you have like a CRM place, that information can be input, but let's say you want to track it in an Excel spreadsheet, that's something you can get your VA to help with. Okay, once you create the formulas and where you're tracking that information, you can utilize your VA for that to be able to help you with that. Any questions?
Yeah, we've got 11 minutes left, Lydia. You've got a few slides here.
Yeah. So the next slide is just about us, the two brands that I have and the work that we perform. And we are doing some rebranding soon. But for now, I would implore you all, if you're not in a position to work with a fractional CFO right now full time, that we do have some online self-paced courses that you can take for law firms. And the exciting part is that if you are a lawyer barred in the state of Florida, you can earn CLEs with our online courses, making sure I'm not back in the light. So make sure you check out our websites or follow us on Instagram. Now, Michael, are you still there? This is what I got for you, Michael. All right, let's go to the next slide, because of course I come bearing gifts. All right, so talking about our metrics, of course, we went through our top 5. I do have a course that has a top 10 KPIs that your firm should be tracking. There's also a downloadable of a bunch of other KPIs that you can kind of browse, peruse, and see if they apply to your law firm. That course online is $79, but you are not paying $79. Wait, there's more. Let's go on to the next slide. All right, you can have a 1-hour consultation with me. I know, I don't know if the light was well, if you can see, but I am pretty attractive, right? So you can spend an hour talking to me. And my voice it's all right, it's not Fran Drescher, but but an hour consultation, you can pick my brain, ask some questions, get clarity on some stuff. I can guide you on so many aspects of running your law firm. Law firms are my niche, so chances are I can help. But wait, there's more. Michael, are you there? Michael, the industry report that you were asking for. Now, here's the thing. There are some free resources that I just Googled. There's like BizStats or whatever, but BizStats is literally, it doesn't go down to like the lawyer or professionals. It's just consultations, right? That's like the level you can go in. It doesn't change by your revenue side. It's very, very generic and basic. However, I am able to provide you with an industry report based on your region, your revenue size, and the software to get that kind of information is valued at about $2,000 for the year. But you would not be paying $2,000. I will send you that report. You just fill out a few questions about your region, where you're located, your revenue size, and I will be able to provide that report for you. So go on to the next slide. So all that valued at $2,329 for only $200 for those participating with Get Staffed Up's webinar today. All right. So, I mean, just speaking to me for an hour, you already have value for that 200. So go ahead. I am going to put the link in the chat for you. And I should have had that ready, but excuse me, I'm going to click here and get you the link where you can sign up right now. The thing is, you do have to sign up by today. I'm sorry, you have till Wednesday to make this purchase and schedule the consultation. Now that means that's just means schedule. You can schedule to meet with me in December if you want, but it has to be scheduled by next Wednesday. This link will be deactivated come next Wednesday. So check in the chats. Make sure you go ahead and check this out. Again, $2,329 value, and you're just getting it for 10%, less than 10% of the price. All right, so that is all I have for you. Any questions?
Yeah, guys, let's get some questions here. We got Lydia's, we got another 7 minutes. We have a CFO right now to ask all of your nitty-gritty questions. So hopefully you have some. I just want to say my favorite type of webinar is when we give really good value and then we give access to somebody for more at such a great discount for our clients. So thank you so much, Lydia, for your time today. I love that. And let me go back to my panel here, see if we have any questions. I will leave, I'll share, I'll leave the sharing up for now so people can see, what they're getting for that 200. But by the way, I'm going to take advantage of that because I want that industry report myself.
Yes. All right. There we go.
Let me go back to the Q&A. Where's anonymous? I love the anonymous questions. There we go. Do you have tips to increase lead conversion rates? Now, this is where your business advisory hat gets put on, Lydia.
Right. Yeah. Oh my God. Where can we go? Okay. Well, lead conversion rates. I mean, it's about it's the people who are reaching out to you, right? So there are things. Well, this is when the person calls and then you're converting to a consultation. So the first thing I would say is, depending on how people can reach you, so whether it's they can call you or on a website, have a good intake form. And that intake form can be, like basic question. I say basic, and I'm using that term loosely, but the minimum questions that you would need to know if this client can be a quality client, right? So you can actually just having those questions and that person going to fill out that form. If they already feel like, okay, I can't answer this question, or answer is no, they can already self-disqualify, okay, yeah, this is not where I don't need to call this firm or waste your time. This is not what I need. So I think that's one thing, is that you can have a really good intake form. I know intake form may mean different things to different people, but what I mean here is, for example, at one point there was a service we provided where we did, before somebody they had to answer, like their revenue size, how many employees they had or whatever. And then it can tell them right then and there, okay, you're like, we may not be the right fit for you. Here's the clients, right? Because you can have all the information on your website, right? Like, here's who we serve and here's what we do. And people who are not ideal clients are still going to reach out to you. So that's where you can do that. To increase lead conversion is one, getting even like qualifying your leads before they even come. Now, if they're calling by phone, it's training whoever answers your phone. Hey, what are the basic questions to ask to see if this person is a viable? So for example, for us, we do business advisory. We work with businesses, not individuals. So my team knows, hey, look, if anybody calls and says, hey, I need help with individual tax prep, hey, we may not be a right fit, but we may have some referrals for you. We have someone you can work with. So that would be a way to increase the lead conversions, is just by pre-qualifying those leads to begin with. Awesome. I see you typing, Brett. You have anything to add to that?
Well, no, I was going to say, I said this could fill up an entire another webinar topic.
Right.
Just on that alone. So I thought you did great in a few minutes. We have another question from Dennis. It's in the chat. It says, and we may need some more clarification here. Can you discuss profitable metrics by attorney?
can I discuss profitable metrics by attorney? Can I get clarification what you mean? You could do net profit by case, by attorney. And that one might be a little difficult if you have, let's say, multiple attorneys working on one case, right? So that one might be a little difficult, but if you have one attorney assigned the case, then maybe, using the net profit by case, it may give you the same result if you have one attorney. If not, it's looking back to my point about making sure that you use the software that you have to its fullest potential. Is, again, this is where it's important to track your hours, whether it's billable or not, right? Because you can run and see, okay, how many hours were billable, right? So what's the cost of the attorney compared to what you're able to bill your clients for that attorney? And then how much time are they spending on non-billable hours? Okay, and that can help you identify the profitability per attorney. Dennis, I hope that's the answer to your that addresses the question. If that's what your question was. Okay, perfect. Thank you, Dennis. Awesome. Any other questions? We have 2 whole minutes.
Yeah, I was gonna say 2 minutes. So if we don't get another question, Lydia, let's make sure people can reach you other than the link. How else can we? Let me stop the share. How else? Let's put it in the chat.
Okay, well, you can follow me on IG. Here, I'm putting it there. And so again, I have 2 brands, so you can follow us on both and have different content depending on what you're looking for. And also, listen, I'm very friendly. You can email me. The only thing I won't give is my cell phone. Until you're a client. When you pay me, then you have cell phone privileges, but you can go ahead and email me. Again, I would send my link for our intro call. It's 20 minutes, but I mean, this deal is a steal. So make sure you get it and get that.
Let me hammer home this point. Do you know how many times in the past 10 years of running a law firm, we've been like, well, how do we know? How do we compare? Like, how do we know? That is so insanely valuable. It's very rare somebody says, like, I have this platform I have access to, and I'm giving it to you for such an insanely low rate. So I hope that everybody takes advantage, because that is really, really I'm like, I just got a lot out of this, and I was hoping our clients would. So
right.
Yay!
That makes me so happy. It makes me happy when people get value and stuff. So,
yeah.
All right, 2 o'clock on the dot. Bye, I'm out. No, I'm kidding. Thank you so much, Brett. It's always fun talking to you. I hope we'll do this again. And congratulations on everything when it gets staffed up. I mean, number 67, fastest growing business. Can we give you a round of applause, yes, Brett?
Thank you. We are just keep meeting great people and helping them, with finding great people. So it's been a lot of fun. Lydia, thank you for your time today. We're going to sign off, and hope everyone loved the webinar as much as I did. The link and the recording will be emailed out to everybody. And Monica, anything else that we left out or forgot?
I don't think so. I will email everyone the recording and the links and Lydia's socials as well, so you can follow her. And it was great, Lydia. Thank you.
Thank you all. Thank you, Dennis. Thank you, Joe. Bye.